Welcome to Grace Kennedy's Investors Briefing. I am Don Webby, Group Chief Executive Officer. With me are members of our Executive Committee, namely Mr. Frank James, our Group Chief Financial Officer, Courtney Campbell, Chief Executive Officer, GK Financial Group, Michael Ranglin, Chief Executive Officer, GK Foods, Karen Chinqui-Aiken, Chief Corporate Secretary, Senior Legal Counsel, Cassida Jones, Group Chief HR Officer, and with me also on the line via telephone is Ryan Mack, Senior General Manager, International Business East, who is based in the UK. We welcome all participants who have joined us via the internet for this audio conference. The briefing has been scheduled to run for 1 hour. We will use 25 to 30 minutes of this time for presentations by our team and the remaining time to accommodate your questions. During the question and answer session, you're welcome to share your questions by emailing us at gkinvestor@gkco.com. That is gkinvestor@gkco.com. You may also contact us by phone at 876-809-1121 or 809-0464. Once again, welcome. I'd like to start off by updating you on some changes at the board. The company completed its transition to an independent, non-executive board chair at the end of December 2013, when the Honorable Douglas O'Rain stepped down from that position and Professor the Honorable Gordon Shirley appointed chairman effective January 1st, 2014. We record our appreciation to Mr. O'Rain for his sterling contribution as board chair over the years. He remains a member of our board. Our new chairman, Honorable Gordon Shirley, another outstanding Jamaican, is no stranger to the company, having been appointed to the board on May 30th, 1996. He also served as chairman of our Corporate Governance and Nomination Committee between July 2010 and December 31st, 2013. We look forward to his leadership of the company as board chair. Thank you very much. In terms of the GK group performance, I would say that the GK group performed well for 2013 in what can be described as a very challenging economy in Jamaica. But as we say, where there's a crisis, there's always an opportunity. And we did, in fact, take some of the opportunities given to us in 2013. Our revenues totaled $67.2 billion, an increase of $5.9 billion, or 9.65%. I'm also happy to report that all business segments reported increases in revenue. Profit from operations increased by $857.8 million, or 20.44%. Profit before tax totaled $5.075 billion, and this is the first time in Grace Kennedy's history that our profit before tax exceeded $5 billion. And that was an increase of $972.7 million, or 23.71%. And we are extremely happy with that performance of a 23.71% increase in pre-tax profits. After-tax profits, however, were flat, and we increased by $7.7 million because of a tax expense increase of $965 million. And our total tax expense for the year totaled $1.28 billion. And Mr. Frank James, our CFO, will explain that increase in the tax expense. We also recorded a one-off expense, NDX, PDX. We were one of the few companies that participated in both the NDX and PDX. And that one-off loss was 293 million Jamaican dollars. As we had said at the time, when we agreed to participate in both exchanges, that we believe at the time that it was in the best interest of our company and the best interest of our country. And as we say at Grace Kennedy, what is good for Jamaica is good for Grace Kennedy. Let me also say that we are encouraged by the country, I should say, passing the first 3 IMF tests. And we are also encouraged that the 4th IMF test seems that we will also be passing. However, we caution too much optimism. There is a long way to go. There are 15 tests. We have gone 3. fourth one is coming up in March, and we encourage the government to stick to the task of meeting those targets. I should also say that we would like to congratulate Minister Phillips and his technical team for a job well done. Let me speak briefly now about GraceKennedy and our strategy going forward. We at GraceKennedy, we have our strategic drivers in terms of our growth strategy as reflected by our vision of being a global consumer group, highlighted by a sustainable growth and innovation, being more consumer-centric, operational efficiency, and a performance-driven culture. I'm happy to announce that at Grace, acquisition teams have in fact been formed, chaired by me. We have a food acquisition team and a financial services acquisition team. So GraceKennedy, as part of our growth strategy, acquisition will be a critical part of that growth going forward. In terms of the global consumer group, we highlighted to the shareholders and the stakeholders that we want to generate half our profits outside of Jamaica. Our performance for 2013 was quite good. Our company, GraceKennedy UK, continues to perform exceptionally well, and I recognize Ryan Mack is on the line. Their pre-tax profits grew over 90%, and they have now been in Europe with Holland, Germany, and France. They are also, as you know, in Ghana, and I'm happy to announce that we actually opened our doors on March 3rd in Ghana as a GraceKennedy Ghana Limited. In terms of our growth, revenue growth, 15% in international markets in 3 continents. We have also been making significant progress, as you had heard, primarily by our UK company, but our Canadian company also performed exceptionally well, and also our US company. The other criteria is leveraging our relationships with our international partner, Western Union. We are now in 9 locations, Jamaica, Trinidad, Guyana, along the Eastern Caribbean, and we recently opened the British Virgin Islands. And what is pleasing to announce is that we are market leaders in all markets with 50% market share, with over 50% market share in all markets. And if you think about the Jamaican market, if you use the Jamaican market as an example, the remittances in Jamaica totals about $2 billion, and we are 50% of that market. So we are cash positive in terms of US dollars. Another company that we are very pleased with in terms of performance is Hardware and Lumber. You would have seen that Hardware and Lumber reported significant increases in profits and in revenue despite a very challenging environment. I'm now going to hand over to Frank James, our Group CFO, to expand on the results for 2013. Frank, over to you.
Thanks, Don. As Don indicated, our revenue was up 9.6% or 5.9 billion, with all 5 segments showing growth in revenue, with pre-tax profits up 23.7% or a little under $1 billion, with 4 out of 5 segments showing growth in profits. Don also indicated net profits were flat, and I'll speak to that shortly. The largest contributor to revenue growth was the food segment, contributing 4.4 billion of the 5.9 billion growth, reflecting growth in both our domestic and international markets. We also saw strong growth in our money services and retail and trading segments. Our operating profit margin improved from 6.8% to 7.5%, resulting in a 20% increase in profit from operations. This increase is despite the $293 million impact of the debt exchange, which negatively impacted our profit from operations. All segments showed growth in profits with the exception of insurance due to a claims review, which Courtney Campbell will expand on. Retail and trading segment had the largest percentage move in profits of over 160%, driven by growth in revenue as well as effective management of expenses. The food trading segment grew profits over 40%, money services 16%, and in the case of banking and investment, 6.5%. However, that was where the primary effect of NDX was felt. And if you adjusted for that, it would be over 50%. As indicated in our stockholders report, net profits were flat due to a one-off change in our deferred income tax in 2012. Listeners may recall that toward the end of 2012, the corporate income tax rate for unregulated companies was reduced from 33.33% to 25% with effect from January 1, 2013. This resulted in a reduction in our effective tax rate for 2012 to 7.7% due to a change in our deferred income tax charge. Now this compares to an effective tax rate of 25.2% in 2013, which is more in line with expectation. The pre-tax performance then of 23.7% growth would therefore be a more effective gauge of our operating performance. Moving to the balance sheet, we saw where total assets grew by 4.3% to over $108 billion. This was driven largely by growth in loans receivable, reflecting strong loan growth for First Global Bank. Also growth in inventories, which was impacted by the growth in sales, as well as anticipated growth in sales and management of our purchasing expenses. We continue to monitor and manage our working capital closely. You will also note from the balance sheet that there is a reduction in cash. This is actually due to us putting our cash to better use, and we increased our lending, as I mentioned, at FGB, as well as we reduced our securities sold under repurchase agreements at FGFS. The group's debt-to-equity ratio remains relatively low at 35%, putting us in a strong position to invest in our business for future growth. We continue to seek improvement for our shareholders and to enhance shareholder value, both through dividends as well as reinvesting in our business for growth. In 2013, we increased our dividend per share by 9%, from $2 to $2.18, or a payout of approximately $727 million. The board also declared a dividend of 70 cents per share at its meeting on February 28, 2014. Despite a just over 10% increase in the stock price during 2013, the board remains of the view that the stock price is undervalued, and as we announced last year, our share repurchase program will continue this year, whereby we will be repurchasing up to 2.5% of shares outstanding over the period of a year. The group's total equity position continues to be strong, growing by 7.4% to over $34 billion. Don, back to you.
Thank you very much, Frank. I'm now going to ask Michael Ranglin, our Chief Executive Officer, GK Foods, to make some brief comments.
Thank you, Don. Good afternoon. The food division had a solid year, with revenues growing by 6% in Jamaica and 19% outside of Jamaica. Our profits also grew significantly and further validates our strategy of deliberate and focused expansion into key local channels and international markets. Our growth in exports led to our winning the Best CARICOM Exporter and Champion Trader at JA's annual awards event last year. Jamaica, our prime market and manufacturing base, continues to experience growth. With 5 factories that provide a half of what we sell here in Jamaica, our focus is on improving our manufacturing efficiency to better serve our consumers here and abroad. This will come from widening our consumer base by providing even more access to our products and brands and introducing competitive new products to serve an increasingly sophisticated consumer. Of note are our meat, vegetable, dairy products, porridges, soups, juices, drinks and sauces that are made right here in Jamaica. Several through an association with over 500 farmers here on the island. We hope to keep the pipeline of great tasting quality products flowing consistently to our customers and consumers at competitive prices through our exceptional staff, reliable suppliers, and real valuable retail customers across the world. Internationally, there are big opportunities, and our results in Canada, the UK, and Africa are very motivating for us. We will continue to build our distribution reach in Canada and the USA with selected products and through specific channels. Similarly for the UK and Europe, it is all about getting on the shelves of the places where our consumers shop, both the existing ones and the new ones that we are seeking to attract. In Ghana and Nigeria, we have started Greenfield, as Don said a while ago, and we are excited about the potential of both these markets. Closer home opportunities, we plan to build further in the region as well as in Central America, and South America, of course, are firmly on the radar. We continue to develop our people for international assignments and are using the various online tools such as Facebook, Instagram, Twitter, YouTube, etc. to engage with and link to our consumers across the world so that we gain better insights on their day-to-day concerns. Our e-commerce sites, buygracefoods.com in the US, Caribbean Food Center that serves the UK and Europe, as well as Amazon UK, have seen real exceptional growth last year, and we're talking anywhere close to 40% growth across these markets and these services. We continue to see increased activity, and this puts us in touch with a set of consumers who have a whole new spectrum of needs. Our internal sensitivity to matters of the environment was demonstrated by our $9 million commitment to the recently formed National Recycling Initiative. We hope to really make a difference to Jamaica, our home base. Thank you.
Thank you, Mike. Courtney?
Thank you, Don. 2013 was, in the circumstances, a good year for GraceKennedy Financial Group. Before speaking of the financial performance, I will comment on what we have done to our customers, because in 2013 we launched many new products. There are two micro-insurance products launched by Jamaica International Insurance Company, the Livelihood Protection Policy and the GK Ahmed, which is a personal accident insurance. Both Jamaica International and Allied Insurance brokers launched mobile apps. GraceKennedy Money Services launched FX Trader Business Solutions, which allows Jamaican companies to send international payments in over 135 currencies across the world. And last year as well, First Global Bank launched the Rewards Your Way credit card program. Should mention that First Global Bank won 2 international awards from Global Banking and Finance Review for Best Online Banking Platform in Jamaica and Best Banking Customer Service Provider in Jamaica. And we're proud of the First Global team for making those awards possible. And then the First Global Financial Services increased their performance, their activity in the capital markets. FGFS raised over $2 billion Jamaican dollars in corporate finance for various clients in the private sector. So turning specifically now to the financial performance by segment, starting with banking and investments, that segment increased profit before tax by $42 million or 6.5%. The adverse impact of the NDX and PDX were felt primarily in the books of FGFS and FGB, and that was over $208 million, mostly in the books of FGFS. But notwithstanding this, I should mention that First Global Bank had a loan portfolio growth of 17.5%, which I think is really good in this economy. And the NPL ratio, the non-performing loan ratio, actually declined year over year from 4.5% to 3.3% at the end of 2013. The deposit portfolio grew by 16.2%. And in the bank, profit before tax increased by 84% year over year. We continue to believe that service delivery is critical to growing this segment, and therefore in 2013, significant investment was made in new technology to enhance our service delivery channels. I should mention that on January the 2nd, 2014, First Global Bank went live with a new core banking system and internet banking facility, Global Access 2.0. And that provides improved benefits and convenience for our customers. In the insurance segment, profit before tax declined year over year by $208 million. That was primarily due to Jamaica International Insurance Company, where we conducted a special exercise to update JIC's claims reserves. The extraordinary adjustment from that exercise amounted to $350 million. And you may ask, why was that figure so high? But all of us would be aware of what has been a not too subtle change in our society as an industry. The P&C insurance industry has noted that persons are now far more aware of and inclined to pursue compensation where they perceive they have suffered a loss. And as a company, our reviews over the past few years had not kept pace with this change, so what we are doing is a bit of catch-up. But it's important to note the fact that JIC was able to update the claims reserves and make that adjustment while continuing to meet its capital requirement. And this is a testament to JIC's strength and viability, and we are extremely proud of the JIC team for that. We firmly believe that by taking the very bold step to take these necessary actions, that the company has placed itself on an even firmer footing to embrace the opportunities that the future holds. JIC looks forward to an exciting year in 2014. We plan to launch new microinsurance products and to introduce other delivery channels. Allied insurance brokers had improved performance in 2012, primarily attributable to growth in employee benefits commissions. And in the money services segment, performed well. As Don mentioned, we maintained our market share of over 50%, but we had revenue growth of 14% and a profit before tax growth of 16% to 1.9 billion Jamaican dollars. We had achieved a special milestone in 2013 as inbound remittance transactions from Canada surpassed 1 million for the first time. And then towards the end of 2013, our bill payment operations received a noteworthy boost from the collaboration with the Postal Corporation of Jamaica, which provides greater convenience and access to our customers. We are thankful to the entire financial services team across the Caribbean, the USA, UK, and Canada for making this performance possible, and we continue to work on building a highly engaged workforce.
Thank you, Courtney, and thank you, colleagues, for very comprehensive briefings. The floor is now open for questions. By way of a reminder, we'll be taking questions via email at gkinvestor@gkco.com. gkinvestor@gkco.com. We have a few questions coming through already. The first one, I'm going to direct it to Mr. Michael Ranglin. We recently read Hilo will invest US $8 million in upgrading their facilities. Michael, can you expand on that?
Yes, thanks, Don. Our Hilo stores have been with us for a number of years, and it has developed into a mixed image. And our aim now is to bring a lot more consistency to what the stores look like, what they look like both on the outside and on the inside, and also to improve the facilities inside the store. There are 14 locations, and we do plan to work on each location over the next, I would say, 2.5 to 3 years to bring them up to a certain minimum standard. And this is where the spend is going to be focused.
Thank you. We have a question coming from Trinidad, Carla. And the question is, can you clarify the profit before tax situation and the changes in the corporate tax rate? What sort of impact has this had on operations? I'm going to ask our CFO, Mr. Frank James, to address that question.
Thanks, Don. The change in the corporate tax rate is a positive. As we mentioned, the reduction was from 33.33% to 25%. During the year 2013, it was supposed to go back to 30% and did for 2013, but the government has announced that it is being reduced as of 1st January 2014 to the 25%. So for our unregulated companies or non-financial service entities, a reduced rate to 25% is a positive. The one-off charge in 2012, which was a positive to the tax line, was a one-off and a non-cash item, so it did not impact operations. It related to our deferred income tax charge and did not impact our operations.
So let me just add also, Carla, that the government recently introduced an employee tax credit, and we expect that that will also have a positive impact on GraceKennedy's corporate income tax rate for the year 2014, and it's commonly referred to as the ETC, and that is for non-financial institutions. So GraceKennedy and the food trading division will benefit greatly from the ETC. Other question, this one is from Michael Ranglin again. How is the extension of the GK footprint into the west coast of USA going?
That activity is going very well. As it is now, we have representation in California. We have also extended to Arizona, and the growth on that side of the U.S. will continue. It is something that we are learning exactly what the consumers there want from us. We have introduced our coconut water, various formats of coconut water, and we're going to be really pushing that activity for the rest of this year and introducing other products.
Thank you, Michael. Courtney, this one is addressed to both of us, but I'll ask you to go first. How do you see the RBC Sagicor transaction affecting the competitive dynamics in the banking space, and in particular, how will FGB handle this new development? What are the plans to realize significant growth in the market share enjoyed by FGB?
All right, thank you, Don, and thanks to the person who raised that question. That transaction is a significant event for the banking sector. What you have is a larger number 3 player. First Global Bank has devised a strategy for growth. We have positioned ourselves as a technology-driven bank, and so we have plans to implement new delivery channels, which will typically be based on technology, to increase access for our customers, and we are focused on executing on those plans.
Okay, thank you.
Question for Mr. Rangley. Matthew gave a progress report on North America, specifically the West Coast, in terms of GK Foods. What about the thrust to grow the business in Europe and Africa, particularly the West Coast? Can you give a progress report on that?
Well, thank you, Owen. In terms of West Africa, we have established a presence, actual physical and legal presence in Ghana. There is GraceKennedy Ghana, and that is being run now by one of our managers that was previously based in the UK. We currently have sales, customer service, and warehousing personnel in that market. We have identified and are working with a third-party logistics provider, and we now have inventories that have arrived in Ghana and are going to be distributed by the end of this month. We should see a fairly decent increase in our sales in that market. We got started pretty well last year. We did have to sort of wheel and come again in terms of looking at how we're going to establish a distribution model in Ghana. We decided to go it on our own rather than working through third-party agents in that country. So as it is now, we have a much more significant presence in Ghana than we planned to at this point. But we think that that is the way to go.
Specifically, what are the Ghanaians looking at products from your country?
Well, we have in that market primarily beverage products. We have ginger beer, we have our Mighty Malt, which is a malted drink, and we have our Tropical Rhythms that's made here in Jamaica. And the malt market is actually pretty big, and because ours is an imported product, it actually has a pretty good following now. The ginger beer, as you may know, in some of these regions, the use of the word beer is something that the public has to be educated about, but they have latched on to it, and we have been promoting it pretty effectively, particularly in Accra and in some of the larger areas. So I think over time we'll see pretty good growth on our ginger beer and our Tropical Rhythms. They actually love the Tropical Rhythms.
What proportion of these manufactured products are made in Jamaica?
Well, the Tropical Rhythms is made in Jamaica, so that would represent about 35% of what we're selling there now. The ginger beer is made in the UK, and the malt is made in Europe.
So one of the challenges that we have, Owen, in terms of manufacturing in Jamaica, which we have said many times, even the Tropical Rhythms is very challenging because of the cost of energy. We cannot continue to be a nation that is going to be a manufacturing nation with the cost at over 30 cents per kilowatt hour. We're competing with other countries that are a fraction of that cost. And that is one of the challenges that we have at GraceKennedy in terms of increasing our manufacturing capacity, because the cost of energy is just too high. And we have said publicly that if we're able to reduce the cost of energy, let's say to 10 or 15 cents per kilowatt hour, we would significantly increase our manufacturing capacity. And what that means is creating new jobs in our country. Mr. James, this one is for both of us. The performance of the stock on the market versus the market and related back to the buyback. Let me start off by saying that last year our stock price increased by 10%, from $50 per stock unit to 55 cents per stock unit. However, that is against the background that the overall market declined by 12%. We are also, based on historical earnings, trading at about 6 times earnings, and as the analysts would know, that is a very low multiple times earnings and 60% of book value. And it is for that reason that the board of directors and the executive management team of GraceKennedy embarked on a buyback of our shares. I'm going to ask Frank to again expand on the buyback of the shares and the way forward.
Thanks, Don. As you have indicated, Don, the board remains of the view that the stock price is undervalued, and when we lose metrics such as the price to book and the price to earnings, we can see where that position comes from. As such, we continue our share repurchase program. We had indicated last year that it would take place over the course of 1 year, and therefore will take us through to about October of this year. At various times during the year, we'll be repurchasing shares in line with that mandate.
Yeah, okay. And after our results, colleagues, our share price as of today is now trading at $60 per stock unit, which is quite a good increase from 55 to 60 over the last week or so. Yeah. Michael Ranglin, can you give us an update on the agro-processing plants? In Jamaica, we need more production, more farming. GraceKennedy has done a good job with the Hounslow plant. What's the future? Any plans for expansion?
Good question, Don. Thanks. That plant has continued to do well. We have deepened our relationship with the farmers in Jamaica, particularly on the western side, based on the nature of the products that we buy out of St. Elizabeth, Westmoreland, Clarendon. We have widened the range of products that we offered, and we have increased the number of points that the product can be seen. So new products as well as new points of retail. We are tracking on target, and our relationship with, at this point, over 100 farmers specifically for that production facility is working the way that we want to. Referring further to farmers, remember also that we have our meat processing plant in Westmoreland where we have relationships, whether directly or indirectly, with over 400 farmers that supply us with pork for the production of hams, bacon, sausages, and a full range of meat products. So I would say agro-processing as it relates to GraceKennedy is doing very well, but we want to actually do a lot more with it over the years.
Thank you very much, Mike. Somebody's asking, Frank, please explain how the ETC works. That's the employee tax credit.
Thanks.
Alicia Gregory.
Thanks for that question, Alicia. The employment tax credit is an initiative introduced by the government really to encourage persons to ensure that they pay and file their statutory deductions on time. GraceKennedy Group has always done so and will continue to file our statutory deductions on time. What it does is allow us to claim as a credit the statutory deductions, that is, such as our NIS, NHT, HART, etc., that has been paid by the company as a credit against our corporate income tax. Up to 30% of the corporate income tax can be received in credit provided we have sufficient statutory deductions paid to meet that. And it requires that the company has paid and filed those statutory deductions on time. It is limited to the unregulated companies in the group, so our food side of the business in particular, we would see where we can benefit from this employment tax credit starting in 2014.
Thank you, Frank. Courtney Dunn, great to see executive leaders using social media. I follow both of you on Twitter. Question, how is GK using social media to further product awareness and promote its brands? Has there been any increase in business as a result of activity on the Facebook page, Twitter, the website? I'm going to ask Cassidy, maybe you're the best person to answer that one.
Thank you, Don. Well, as a start, currently we have about 302,000 followers, 11,000 on Twitter and 291 on Facebook. And in fact, what we did early last year was to form a dedicated unit to actually focus on social media. And what we have seen is that, especially the Gen Y, they actually follow us and they even promote our products on our behalf by befriending each other and ensuring that we all are keeping in touch with them. So I'm going to ask Michael to just talk a little bit about how the marketing aspect has taken place as it relates to social media. Michael?
Thanks, Cassidy. I think one of the things that we seek to do is to, as the question asks, how to figure out what is a hard benefit of social media. I would say, as it is now, we are learning to use social media effectively. We are in touch with our consumers. We are improving our own knowledge of what they want, what they like, and using that to help us design products that serve a wider range of consumers. It will be difficult for me to call an actual revenue number that I can associate with our work in the social media, but what I do know is that we absolutely have to be in the space, and we are in the space, and we're going to continue growing in that space.
Yeah, I think just to add, last year we got a pleasant surprise where Switz Beats, and I'm sure all of you listeners know who Switz Beats is. He is Alicia Keys' husband. Well, he tweeted that Grace hot pepper sauces are his favorite sauces. And guess what? He has 1.9 million followers. And we immediately saw an increase in awareness of our hot pepper sauces. And that gives you an example of the power of social media. And in my own opinion, I think social media is going to become one of the most powerful business tools in years to come. Next.
We also had some popular chefs.
Of brand, yes.
Our cock soup, we had an event last year, I think, for Chef Roby. So I think it's something that is growing.
Yes, and as Cassidy said, we're very focused by setting up a special team. Courtney, lot of scam, been in the news. Any comments? How have we been doing since 2012?
Well, since 2012, we have always had this strong commitment to protect our customers. And since 2012, we have implemented additional control measures on money transfers. Those measures have required additional investments by our partners, Western Union, as well as ourselves. But we're confident that our systems monitoring and our compliance capabilities are robust, and our commitment to monitoring our systems really remains a top priority. We have seen a reduction in the activity, but we're not complacent, and we will continue to review and to implement such measures as may be necessary.
Okay, I will repeat again. GraceKennedy, we have a zero tolerance for any misuse of our network, a zero tolerance. This one is for Owen. You have a follow-on question?
Yes.
Go ahead, Owen.
A follow-on to that. Thank you, Don. Is GK Money Services benefiting from NCB's jettisoning of their own remittance business, and how much benefits are you reaping?
It's too early to say. Recall that in this market, and in fact, as Don said earlier, in all the markets in which we operate, we are market leaders. I can't say what NCB's market share was, but most of the year 2013, we grew market share each month, and that trend we believe will continue into 2014. But I can't specifically tell you about the impact of
you haven't seen any impact?
No, but I expect us to continue to grow market share, whether they were in the market or not.
Can you speak to First Global Financial Services? How is that doing in the marketplace against other players such as Cap Markets?
The emphasis at First Global Financial Services has been, and throughout last year and into this year, on increasing fee income. As I mentioned earlier, we have become a much more prominent player in the corporate finance market. And as I said, we raised approximately $2 billion for Jamaican private sector entities in bonds and commercial paper and so on. We continue to see opportunities for that, and you will probably in the next couple of weeks hear some more about similar transactions.
And your risk management is good?
Yeah, strong. And that's the GraceKennedy standard risk management.
Thank you for those questions, Owen. Michael, this one is for you. In truly competing in the U.S., and it's from Stephen Livingston. Thank you, Stephen. In truly competing in the U.S. and international markets, would it be safe to say that exploring U.S. manufacturing partners is something we're putting on the table versus supplying from local manufacturing? Also, for local manufacturing, are we exploring energy creation strategies, solar, etc.? Great question. Great question, Stephen.
Thanks, Stephen. In terms of alliances with the U.S. manufacturers, as opposed to moving products from Jamaica, the answer is yes, where it makes sense. If our sources of supply here in Jamaica can compete, then we are going to be using our internal plants, because it just makes more sense for us to build critical mass through them. But we do have manufacturing that takes place across the world. So, as I said in my talk before, half of what we make, of what we sell, we actually make ourselves here in Jamaica. But a lot of products actually come from other sources of supply, including from the U.S. In terms of alternative energy forms, we do have an internal energy committee, and that committee is chaired by me. And there are certain initiatives that we have taken. First, these have to do with conservation. We have made significant strides by just changing the way we use energy. And we are now this year looking at pretty significant projects that relate to alternative energy forms, including solar. So yes, that's something we are doing.
Don, if I could just mention.
Yes, go ahead.
Just to mention on solar for customers out there, whether households or businesses, First Global Bank has a very competitively priced solar energy loan that it may suit you to check out.
Yeah. My colleague Courtney Campbell never misses a sales opportunity. That is good. Okay, can you expand more on how you are doing in terms of your revenue vision objectives in growing in 3 different continents? So what I'll do, I'll give you some numbers in terms of how we are doing. I'd say that we are doing well, but let me expand on it. So in terms of North America, Caribbean, and other, as a percentage of the GraceKennedy group sales, we're at 19.3%. In terms of Europe, including the UK, we're at 16.6%. Recall that we have set ourselves a target to have 15% in 3 different continents. And Africa, we have not registered yet in Africa. We're at 0.1%. Having said that, our revenue in Africa grew by 91.3%. If you do the calculation, 64% of our revenue is in Jamaica. So what this is saying, colleagues, is that there is a tremendous, tremendous amount of opportunity for the GraceKennedy Group to grow in West Africa. In fact, I think Owen asked Michael the question earlier. We employed our first employee in Ghana. Adolphe is his name, and he was here with us for the business conference in January. And when he tasted our hominy porridge, he was so excited and said that this thing is going to sell a lot in Ghana. So we are very encouraged in terms of Africa. Again, we are going into Nigeria with our nutriment, with our nourishment, and we expect that also to do very well. Other questions? Courtney, can you again expand on insurance? The profits, there was a decline of 24 million in the 3rd quarter, but there seems to have been some recovery. Can you expand on that? For the last quarter, what happened?
Yeah, certainly, Don. I mentioned before the claims review exercise that was being undertaken in Jamaica International Insurance Company. By the end of the 3rd quarter, most of that review had been completed. And so what you saw in the 4th quarter of the year was pretty much a return to the normal operating profits.
Okay.
Yeah.
Thank you very much. Regional expansion. Which business segments are most ripe for regional expansion within the group, and what would be the timeline? So in terms of regional expansion, we have said that our financial services division is the business division that we think has the competitive advantage to expand in the region. We believe that both banking and investment and insurance, we will do well in the region. And as you know, we're already in the region with our remittance business. Trinidad, Guyana, Eastern Caribbean, where we are market leaders in all the various markets. Courtney, do you want to add anything to that?
No, I think I've got it. Yeah.
Okay, another question, Michael, is coming. Hilo seems to be very popular. Hilo Barbican is looking really good. What are the plans to further develop other stores? I think you addressed that one.
Yeah, that's related to the last question, and yes, very good observation. We actually have started the work between Barbican and Manapak, and you will see some, I would say, some striking changes in both locations over the next couple of weeks and months, and then that work is going to be extended to the other locations. So he's right.
Okay, thank you. With the expansion globally, and this one is for Cassida Jones, Global Mobility, what are the plans in the group to give Jamaicans working here the opportunity for international exposure?
Thank you, Don.
And I have especially Ghana.
Okay, that's a good question. In fact, as Don mentioned, we do have our local nationals there already, but what we plan to do through what we call a global mobility program is to identify persons who are mobile. In other words, you've spoken to your spouse, everybody's on board, and you're willing to go as far as Ghana. And we actually have developed what we call a global mobility test to administer to the persons who have actually expressed an interest. So we actually have some funds set aside to ensure that persons get an opportunity to go to Ghana, and to also have persons come from Ghana, if needs be, to Jamaica to get some exposure, to ensure that our culture is sort of immersed in a way as it relates to our GK ethics.
Thank you. You again, Cassida. Questions flowing in for HR. Really good story about the internship program. Are you prepared to do a new one for 2014?
Prepared. I'll admit, however, that we've reduced the numbers. So we have actually started the recruitment process. We actually have a short list of candidates. And what we do also is to check with our businesses to ensure that there is some correlation between what we're bringing into the organization and what the business needs are. So what we're finding, for example, is that marketing, actuarial science, business administration, those are the areas that we're focusing on. So if for any young person who is listening, it's important to always tap into the knowledge of the businesses and to ensure that what you're studying, there are opportunities out there like what we have offered to our interns in GraceKennedy.
Thank you, Cassida. Big congratulations on the real estate development project downtown Kingston. Will it house some Grace subsidiary offices? And part two of the question, will the proposed REIT be registered in Jamaica? Well, I'll answer the first one, the last one first. Yes, the REIT will be registered in Jamaica. The plan for the Grace Commercial Center is to have retail on the bottom floor, including a gym, wellness. Then we'll have enclosed parking for a few floors, and then we'll have executive offices at the top floor. There's also some interest, which we will confirm, that an international company would like to be a part of the development as a tenant in our offices. So we are very, very excited about this latest development in terms of GraceKennedy having the opportunity to develop downtown Kingston, because we really believe that this is a place to be. We have been here for 92 years, and we intend to be here for a very, very long time. The question is, has GK ever considered issuing preference shares? Frank, maybe you're the best person to answer that.
Sure, thanks, Son. We do continue to look at opportunities for raising capital and raising debt in the market. Preference shares, we continue to look at that. Sometimes We have actually raised preference shares at the subsidiary level, though we currently don't have any raised at the parent company level. So it is something we look at if it meets the needs at the particular point in time.
Thank you. Another question, Michael, about West Africa. Saying here that you mentioned beverages, but are you not selling food products in West Africa?
Yes, in terms of our focus, our initial focus, it's going to be on beverages because we have taken a decision that in the new markets that we are going, our beverage category is what we will introduce first, and then as a lead category, and then carry other products in. Just to say that both in Nigeria and Ghana, our corned beef has been selling there for years, though not so much under our control. We're going to take much more control of the sale of beverages and other food products.
Okay, Frank, this one is for you. My good friend Donna Alexander asked it in a different way. ROE 20%, how are we going to get there?
Thanks, Don. We continue to focus on improving our return on equity and managing the way we use our capital. Both Mike and Courtney spoke about how we are looking to improve our performance in our existing businesses. So we continue to see organic growth opportunities, but we also see opportunities in acquisitions. And through both organic means and means of acquisitions, we expect to see the improvement in our returns.
Thank you very much, Frank. Another question with Ghana, Mike. Are you really planning to set up a manufacturing plant in Ghana?
Yes, that is the plan.
What's the cost of energy there? I mean, comparative cost.
I don't have the figures now. What I will tell you is that Ghana has oil, so I expect that the cost of energy will be a lot lower than we experience here. That would be my expectation. And they have a lot of incentives from manufacturers.
You also have to take into consideration when the cost of shipping. And I mean, if we set up a manufacturing plant, or when we set up a manufacturing plant in Ghana, that can also be used as the base to export to other African nations in terms of our tropical rhythms, which is the primary product that we produce there.
What's Ghana's risk profile at this time? Because, there tends to be volatility in some African countries. What's the risk profile, particularly as it pertains to business and manufacturing?
So, Ryan, are you on?
Repeat the question because I'm not hearing the person.
I'll ask the question. Just for information, Ryan is the executive that has overall responsibility for expansion into Africa, as he's the managing director for GK UK. Owen is asking the question, Ryan, about the risk profile in Ghana. Have we done our homework to ensure that we are covering all the risk bases over there?
Yes, we have. We have actually examined the risks in Ghana, and just to give you an idea, Owen, when you compare it with say, countries like Jamaica and other countries in the Caribbean, we recognize that the risk is not much greater certainly from a security point of view there that allows one to pursue these things effectively.
Okay. One of the things, Owen, that I'd say that we have also been getting guidance and advice from the multilaterals in Ghana and also international companies working in Jamaica that are in Ghana in terms of the accounting firms and the banks. And they have been very, very helpful in terms of guiding us as we establish in Ghana. Don, one of the best news today is your acquisition strategy. Is it for Jamaica? What I'd say, our acquisition strategy is in line with our vision, and so we'll be looking at acquisitions both inside and outside of Jamaica. And I think we are being very focused, and hopefully we'll meet our objectives, our growth objectives through acquisitions. Don Alexander. Hello, Don. Are we sure there are no more skeletons in the closet at JIC, like inadequate reinsurance? What I can say, Don, is that our reinsurance policy, our program has always been very conservative. So I can say to you and to the listeners that our reinsurance program for GIC is totally adequate, as we take a conservative position in terms of reinsurance. Any more skeletons in the closet? We have done our homework. It lasted a few months, as you heard from Courtney. We brought in some help from overseas experts, and I feel very confident about Jamaica International Insurance Company going forward, and I think they're going to have an excellent 2014 under the leadership of Grace Burnett. Courtney, you want to add anything to that one?
No, I think so. I just wanted to underscore that we took a thorough look at the operations of that business, and I was going to make the very same point that our reinsurance program has always been and remains a conservative one.
Okay, for Mr. James, I think we have one or two more questions that we can handle. Mr. James, I heard your numbers on dividends, but they are still too low. The yield is low. What are you going to do about that?
Thanks, our listener. We continue to look for ways to improve our dividend return, but we have to balance that against ensuring that we invest in the future of the business so we can actually grow our profits and therefore grow the value of your business. The dividend yield was around 4% or just under 4%, and we recognize that that can be more competitive, but we grew it by 9% in 2013, and provided that we have enough to invest in our business and grow the business, given the demands and the strategies that we have outlined, both for acquisitions and for organic growth, then we'll continue to look at how we improve our dividend return to our shareholders.
Okay, there's a question here on corporate social responsibility. As you know, GraceKennedy, we pride ourselves in terms of being good corporate citizens. We can speak about our various foundations, the sponsorship of champs, etc. I'm going to ask our company secretary, Karen Chinqui-Aiken, to speak to us a little bit about corporate social responsibility in the GraceKennedy Group.
Thank you, Don. The GraceKennedy Group plays an active role in the community, and we have done so for many years, from inception perhaps. We do so primarily through our GraceKennedy Foundation and our Grace and Staff Community Development Foundation, which for the Grace and staff, all members of staff participate in some way towards the work we do in the community. We have focused more specifically on education and sports, and we do so through our homework centers where staff members actually and others participate by actually teaching the young people in the community. We do so through our many scholarships and bursaries. There are also initiatives spearheaded by the business units who really give back in many ways. And an example, Courtney will tell you, is the iPledge program initiated by GraceKennedy Remittance under the Western Union brand. The program continues to drive to encourage primary school students to read more and improve their literary skills at a time when everybody is tweeting yes and everybody is on Facebook, etc. I think that company is trying to really promote the importance at the same time to ensure that we are able to communicate at all levels. The First Global Bank and First Global Financial Services, in collaboration with the Ministry of Education, continue with the implementation of the program known as Music Perfect Pitch for a Sound Education. Courtney, I don't know if you wanted to say anything about that, but really very exciting and well received, and shows the interplay between the cultural and the academics. And we also most particularly continue our commitment to the development of sports among our youth with the annual Boys and Girls Championship in association with the Inter-Secondary School Association. So down there, this is just a tidbit of what we do, as you know.
Thank you very much, Karen. Ladies and gentlemen, this brings today's briefing to an end. Thank you for your participation. As of tomorrow, a link to today's broadcast will be available on our corporate website, www.gracekennedy.com. If you have any additional questions, you may still submit these to gkinvestor@gkco.com. We also value your feedback on the streaming experience and any suggestions you may have as to how we can improve this experience for you. Thank you very much and have a great day.